Benzinga here. I'm very happy to be here today with my friends from iVest. Let's just do a quick poll. Who here is familiar with iVest and who here knows about market gear? Go ahead and drop that in the chat. Tell us if you've heard of iVest, if you've done anything with it. None? Nope. Haven't heard of it? Okay, you guys are in store for a treat. So I've got today with me Rance Mushek. Rance, can you go ahead and pop in and say hello to everyone? Rance is the CEO of iInvest. Market Gear is their new product. Rance, how's it going?
Excellent. Glad to be here as well. I look forward to sharing some cool stuff today.
Excellent. Very good to have you. Also with me today is Chris Mercer, COO of iVest. How are you doing, Chris?
Doing well. How are you?
Wonderful, man. It's great to have you here. I know that you guys have a great presentation put together on some option strategies. Can you give the folks an idea of what you have in store for them?
Sure. We're going to talk about bull call spreads primarily. We're going to focus, we want to keep it tight and train people on one specific type of option strategy that we really like, that I think a lot of people will find useful. And when we get into the presentation, I'll sort of give you a list of the order of events here today, but that is going to be the primary option strategy that we're going to talk about. And we're going to show it both as examples in a PowerPoint and then live in the platform. And then, you know, we've got some special new stuff news-wise to show you guys as well.
That's fantastic. And I just want to remind everyone, take notes. I got my notebook right here. You never learn enough about options. It can be pretty tricky and they can also be very lucrative. So make sure you're taking notes on what you hear from Rance and Chris here today. So without further ado, Rance or Chris, I'm not sure which one of you actually has the presentation. Are you ready to start sharing?
I am. Rance has the presentation. Chris is going to start with the first slide or two. Also, I don't know if you want to turn the camera function on or not. I'm not able to turn that on. Doesn't matter that much, but if you had it on, I'd share that. But in the meantime, if you share, I'll share my screen. And
yeah, it's not letting us put our videos on them.
So yeah, here's what I'll do. I will go ahead and make you the host, which I think will give you full control. So go ahead and try that now. And then Rance, you should be able to make Chris a host or a co-host as well. And that should give you the full Zoom suite of capabilities.
All right, so...
And if not, it's okay. I can still talk.
And I'll go ahead and turn my camera off and let you guys take it away. And just so you know, Rance, you want to, in order to get Chris on there, you just want to go down to participants, and then in the panelists tab, you'll be able to right-click or hover over Chris and then give him that co-host capability. We're in Zoom's world now.
All right.
Sweet.
There we go. And I think you should be able to turn your camera on now, Chris.
Woohoo!
If I'm not mistaken. There we go. All right.
All right, guys, take it away.
And then let me share my I can share some way. All right. And
Boom. Boom.
There we go.
There it is. All right, folks. I want to thank everybody for coming, first of all. Looks like we've got a good turnout today. We're excited to show you several things, including our new retail product, which is Market Gear. We are iVest Plus. That is the name of our company. We have a platform that has been used by educators, stock market educators, for years. It's about 5 years old overall. We've added tons of features along the way. And recently, we've discovered that there are so many great features in the platform, and people like to use it on their own, not just with an educator guiding them, that we've decided to roll out a retail version of the product, which is what Market Gear is. And we're happy to announce also that we have a partnership with Benzinga to provide real-time news and their live audio squawk in the platform. And we're going to start out today by walking our way through some options education. Then we're going to show you some of how that can be used in the platform. And then we're going to bring it back to the Benzinga integration and what it means to have a great news source like Benzinga in the platform, that you can take a news story and move from that to researching a stock, analyzing the chart, analyzing the fundamentals, and moving straight into an option strategy in just a few clicks based on what we show you. So the general scope of the next hour or so looks like this. We're going to define, just for those who aren't familiar with options at all, we're going to briefly define what a call option is. And then Rance is going to go through and talk about a specific strategy called a bull call spread, and get into the nitty-gritty details of what's useful about this particular strategy, when it can be used, how to use it. We're going to go through a PowerPoint that shows a Netflix example and compare the trade to using the stock versus regular options. And then we're going to flip into the platform itself, into the Market Gear platform, and show you some live other examples in today's market of bull call spreads and where they could be used. And then in that and from that, we will pivot into what we call our trade journal, which is easily the most popular feature of our platform. Will help you improve on your trades by tracking your results and being able to see different types of trades grouped together. And then, like I said, we're going to make our way back and go to the Benzinga integration to show you how you can take that real-time news and get straight into research and options trading very, very quickly. And I just wanted to mention really quick, one of the things about the Benzinga integration we're very excited about is that we are currently the only provider out there that allows the Benzinga Squawk. If you've ever used the Benzinga platform before and you have the Squawk integration, we have it on mobile. So we have what we call Benzinga Squawk on the go as part of the Market Gear platform. So with that, I'm going to hand you off to Rance. Rance is obviously the CEO and founder of the platform, but he has a long and deep history of both education in the industry and trading options in particular. So it's very hard to find many people that are better suited for teaching you anything about options than Rance, and I'm going to let him take over for now.
All right. Well, thank you very much, Chris and Neil. Really look forward to sharing this with you today. One thing I wanted to share as we do jump into this, I'm going to use real market info today. The examples that I'm going to do are all going to be live, except for one in the PowerPoint, but it's as of yesterday's close, so it's still pretty relevant. I just want to make sure that we are very clear that anything I share with you today is being done as an educational example only, and is not in any way to be construed a recommendation for any specific trade. Right? So with that, let's jump into the call option. Now, some of you, I would assume that a lot of you on this call know what this is, so bear with us for just a second to cover a baseline so everybody's on the same page here. This is the call option. Now, we're only going to talk about calls today, not puts. So what a call is a contract that controls, one contract controls 100 shares of stock. That's a contract between a buyer and a seller, and it's going to give the buyer, so if I buy a call option, it gives me the right to be able to buy that stock at a specific price or contract price known as the strike price. And it's only for a given period of time. So there's going to be an expiration date for this. And for that period of time, I'm going to pay a dollar amount to lock that in. So to just put that in a practical kind of performance here, idea here, let's just take a look here at Netflix. Now, this was as of yesterday's close. And Netflix was trading at 4 1/4, actually 425.50 to be exact. So the Netflix September 18 425 call option was going for $39.15. So again, what we have is an expiration date, that's the September 18th. The strike price, the price at which I could buy the stock if I were to buy this option, that I could lock in the price to be able to buy the stock at 425. And for that, I'm going to pay $39. Now, mind you, this is all the way out till September. But let's just look at what that means on from a standpoint of the risk graph and how this plays out. Now, a lot of you are probably familiar with the risk graph as well. If not, no worries. You'll catch it here real quick as we go through this. First of all, what we are talking about here is the 425 option. So this is the stock price as the stock goes up or down. Right, and where you're at in your profitability in this position. So whether or not you have a profit or a loss in the position. So in this case, with the stock at 425.50, we're buying the 425 call. Now I realize that there's positions where you can do in the money and out of the money. It changes the thing. I'm using at the money for this definition right now, and we're going to build on that as we go through this. So in this particular case, at 425, I pay $39.15 for that option. So I have the right to buy it at 425, which means it has to go up enough for me to be able to cover my cost of $39.15 in this position. So in order to break even, right? So in other words, this is my cost area or risk area, right? If the stock goes up, I'll get to a point of break even. That's going to happen at 464.15 or a $39.15 move of the stock in order to get there. But we're not in it to break even. We're in it to make money, right? So just to share this with you, because I'm going to do some comparisons with this. What would it take for me to make a 100% return in that option? Well, if I paid $39.15 for it, it gives me the right to buy it at $4.25. It has to move up enough to cover my cost and up enough to make that profit, which would, that 100% return mark would be at 503.30. In other words, a $78 move in the stock. Now, mind you, compared to buying the stock itself, a $78 move in Netflix between now and September, you know, it possible, you know, it could get there, right? And you could have that type of return in this position. Now, I am taking expiration numbers on this. There is an in time part of this, and we will address that a little bit when we get into the live example. But again, just as a very simple thing with the call definition, it gives me the right to buy the stock, in this case at $4.25. I'm going to pay $39.15, so I have to make that up. So my break even is going to be at $464.15, and I can double my money in the trade. But in order to do that, I have to get up here to 503 in this. Now, so let's take a look at this from a standpoint of you know, what that does for my position here. If I go to my next slide here, there are some challenges with directional trading of options. So, you know, we're talking about this as a baseline so we can get to the bull call spread, but let me just share with you a couple of challenges here if you're going to buy an option by itself. First of all, it is a higher cost of trade than what we're going to show you in spreads. It's still lower cost than buying the stock, but it still has that cost factor to it. The other thing about an option, we went out here till September. Well, when the stock's at 425.50 and we're buying the 425 option, the vast majority of this premium is called time premium, right? And that's going to decay as you get closer and closer to that expiration date. So you have to deal with the time decay factor in here. And really, if you think about this, if options are priced perfectly, you know, by the market, they're going to have built in the anticipated move of that particular stock. So the benefit here in one way is that a higher priced options means a higher anticipated move. But that higher priced option also means that you need to have it move more than the built-in market anticipation is in order to really be able to profit from that. One of the other things about this is, and this is a point that I think anybody that's traded options directionally, especially, you know, had this happen to them, where you go out and you buy an option expecting the stock to go up, and the stock in fact does go up. Again, we're talking call option in this case. The stock does go up, but it didn't go up enough to make up for what you had paid for it. You end up losing in the trade. So, you know, one of the ways to solve that is give yourself more time in the trade, but more time also equals more cost. So again, we're in this position where in order to, you know, break even, we have to see quite a bit of a move, and in order to really make money in the trade, quite a bit more of the move. In fact, if we just look at this for a second on the chart, what you'll see here is that in this particular example, what I have here is our, you know, the price of the stock. And again, this was as of close yesterday. It's actually up a bit today. But my break-even point is all the way up here at my 464 with the profit, that 100% return coming in all the way up here at 503. Now, if you look at the long-term trend on what's going on here with this, is it possible that that could happen? Absolutely. In fact, by the way, the end of the chart here is about that expiration period right there at the end for that September 18. So is it possible that it could trend up to that? Absolutely, it's possible. But, you know, again, it's still a bit of an order for that to happen. So with that in mind, let's take a look at another way that this could be addressed. So in that, we're going to talk about the bull call spread. So in the bull call spread, first of all, I'll talk about the structure in a second. Let me share with you some of the benefits of it first off. Number one, it's a lower cost trade than directionally buying options, or certainly than buying the stock itself. Because it's a lower cost, it's also a lower risk trade. Now, there is risk. You can lose money in the trade. In fact, you can lose 100% of the trade cost. You can't lose more than that, but you could lose 100% of what you have in the trade. But compared, you can with a call option as well. However, in this particular case, you'll see that it's going to be a lower cost and therefore lower risk. Because it's a lower cost, you're also going to have a lower break-even point on the trade, which just simply, because it's a lower break-even point than the directional option itself, of course, it gives a higher probability of profit in the trade. Also, because of how we're going to structure this trade, we're going to reduce both the impact of time and also the impact of volatility. And two of the biggest enemies of options trading, depending on which side you're on, right, of the trade, but two of the biggest impacts in options trading can be the impact of time or the impacts in shift in volatility. Now, time is one direction. Volatility can go up or down, right? So these can have impact on the trades. However, because how we structure this, it actually reduces both the impact of time and the impact of volatility. And one of the other things about this, and unfortunately time-wise today, with all we're going to cover, we're not going to be able to get into repairs or adjustment strategies, but one of the great things about this is that bull call spreads are very adjustable. You can, if it drops down and you want to have a chance to, if it gets back up to where it is today, you're back to break even or making money in it. There's ways to do that. There's all sorts of different ways that you can adjust. If it's going well for you, be able to take money off the table and let it continue to run, flip it from bullish to bearish. There's all sorts of things you can do. And being in this combo position can allow that. So it gives you more flexibility. There are some disadvantages. One of the disadvantages of the trade is it is a limited profit trade. You'll see this in just a moment as we show you the risk graph and define this, but it is a limited profit trade. However, that's if it's not managed, right? So you're going to put on a trade out to September, and just like if I buy a call option, I don't have to hold it out to September. You don't have to, in the bull call spread, you don't have to hold it to September either. So what we're going to do here is show you how this is structured. We're going to show you with that September, but the reality is that you can manage it and still be able to continue to profit as the stock continues to go up if you manage it. So it's only a limited profit if you don't manage the trade. And one of the other things I will tell you about it, and you'll see this as we get into it, the in-time curve, or how the trade plays out in the in-time in the trade. There's some things you have to work on that as well. So that's some of the benefits. So let's talk about how we structure this. Well, we talked about buying that call option, and we're going to do that exact thing. We're going to go out and buy the September 18 425 call for that $39.15. At the same time, we're going to sell a higher strike call, right? So the higher strike call in this case, we're going to go out $20 higher, and we're going to sell that September 18, but this time the 445 call option, and that's going to bring us in $29.88. So the combination, and by the way, these are real numbers as of yesterday's close. The real cost of this trade is $9.28. Now, mind you, if I buy the stock, I have $425.50 in the trade, right? If I buy just the call option, I have $39 a share in the trade. And if I do this bull call spread, I've now reduced that to almost a quarter of the cost of just buying the option, and I'm now in that trade for $9.28. And by the way, still all the way up to September, but now in it for substantially less money. So let's take a look at, we looked at the risk graph for the call option. Let's take a look at this for the bull call spread. And to do that, go to this next slide here. And so we have, again, the exact same position we're talking about, for $9.28 in the trade. Now, I'm trading $39 option and a $29 option, but my net in the trade is only $9.28 in the trade. So just like a call option, my risk is the cost of the trade. That's exactly what I have in here. The 928, that's my cost and my risk in the trade. So the most I could lose in this trade is 928. If it falls below 425 and you keep right out all the way at expiration, yes, you can lose the 928 in the trade, but you can't lose more than that in the trade. Now, the way you calculate the break-even point for a call option is the strike price that you're buying plus the premium you paid. Well, it's the exact same thing in this particular case. It is the call option I purchased, right? So I also sold one. I purchased, and plus the cost of trade of 928. So that puts us at 434.28 is my break-even point, right? So substantially lower break-even point than the call option itself. Now, I sold, by the way, one thing I do want to mention here, because this frequently comes up in a question. Wait a minute, you sold the 445 call, so you're naked there. No, I'm not naked there. I am covered by the other option that I own. So just like if you had a covered call, right? If you sell a call to somebody, giving somebody else the right to buy the stock from you, what happens is if you own the stock itself, it just takes the stock and delivers it to them for the price that the contract price. In this case, 445. Well, you don't own the stock. You just own the call option. So what will happen is if somebody says, oh, wait a minute, I want the stock at 445, you go, okay, great. I want the stock for 425. So you'll buy it for 425, deliver it for 445, and you make the full amount of the spread minus the cost of the trade. Right. So I just want you to be clear. We'll get more of that, but I want you to be clear that you are not naked in this position. It is a limited risk trade because you have the 425 call option covering your 445 that you sold. Right? So again, coming back in here, the cost factor on this is 428. I'm sorry, 928. So if you have a 425 option, your break-even point is at 434.28, the 425 plus the cost of the trade itself. Well, and again, we're not in the trade to break even, we're in the trade to make money. So if I look at it from that perspective, my 100% return mark here is going to be at 443.55, right? So in other words, if the stock is at 443.55 on expiration, what's going to happen? Nobody's going to exercise the 445 option, it's out of the money. However, I'm going to exercise the 425 option and buy the stock at 425 and sell it at 443.55, right? So I'm going to be able to make that amount in the trade. So that 100% return mark, by the way, in this particular example is $18.55 move versus almost an $80 move when we were talking about the option itself. In this particular instance, I've reduced that substantially down to literally an $18 move to be able to do that. And I'm still all the way out to September for that to be able to happen. So let's take a look at this also on the chart and see how that would play out, you know, or how that looks on there. So in this particular case, I have, sensitive mouse. There we go. In this particular case, we have, again, our 425.50 was where the stock was. Our break-even point on this now at the 434 and our 100% return mark at the 443.55. So much, much lower than it was in the call by itself. And really to illustrate this a little bit better, let's look at some of the numbers here. And I put together this little comparison for us so that we could take a look at this. And first off, let's talk the stock side. Now in the stock, we buy the stock for $425.50, right? Where's my cost of trade is $425.50. My break-even point, $425.50, or where the stock is today. So the percentage move to break even is nothing, right? It's where I purchased the stock. Right? Again, we're not at to break even, we're at to make money. To double your money in the trade, the stock would literally have to double up to $8.51. Now, I will say that, of course, you can trade on margin. One of the things about trading on margin, it doesn't change your risk, it changes your leverage. So you could, you know, on a 50% move of the stock up, you could double your money in the trade, but you're still talking about over a $200 move in order for that to happen. Right? So that's the stock position. In the options position, again, what we talked about was that 39.15 option for the 425 option. And so my cost of the trade was the 39.15, my cost and risk. So my break-even point would be that lower strike plus the cost of the trade, which puts me at 464. That's an 8%, a little bit over 8%, almost 8.5% move of the stock to get to break even. Again, since we want to make money in this, our money point was at 503, or a $78 move in the stock for that to happen, which is an 18% move in Netflix for me to be able to double my money in the option position. Now, if we take that over to the bull call spread, let's take a look at what happens. Instead of 425 in the trade, or instead of $39 in the trade, I'm down to $9.28 in the trade. So if I did this as a one contract trade, that is $928 in the trade total at risk in the trade, and you're still able to play with a stock like Netflix all the way out there. Even though you're using these higher priced options, your risk is limited to $928 a contract. So where does that put my break-even point? Instead of 464, I'm down to 434, or literally just a little bit over a 2% move in the stock. My double my money point in this position is at 443, or an $18 move. Instead of 503 and a $78 move, it's a $18 move of a $425 stock, or 4.25% move in this, and I'm in a place where I can double my money in the trade. So now, one of the things about this is if it goes up above that 445, I do have a limited gain, as I talked about. So let's take a little bit further look at the comparison in the two, and look at it again on that risk graph scenario. So here's the risk graph of the two positions. And what I want to share with you here is that, we had already discussed that previous slide. My max gain is if it hits 445, because at 445, anything above 445, the person who bought the 445 call from me is going to want the stock. Now I realize it's through the market, all that, but really you're going to get called out, right? So you're going to have to deliver the stock at 445. Remember, you're buying it down here at 425. So you're still pulling in that full $20. Your profit is that $20 minus your $9 and change cost of the trade. So you're still making that over 100% return. Now, if you were to buy, now I did this as a percentage, right? So you can better compare this. So if you were to do this trade with just the call option, now, I've had people say, well, the problem with this is that it has a limited gain on it, where if I just buy the call, it can go up forever. Well, that is true. However, in order for this trade, a straight call option to make the same money that the bull call spread would have made, percentage return wise, you would have to see the stock go up to 497. 497 is where this crossover, and your profitability would be the same as it is in the bull call spread that you realized when you were all the way down here at 445. So my point being here is that if you're riding this trade from 425 and it goes up through 445 and you still looks like this thing's going to continue on, great. Close out this trade and reposition this trade. You might be at the 455, 475 or something like that, which is still way below this point here. By the time it gets up to this 497, you could have rolled this thing a couple different times to be able, before it got up to that level. And the thing about this, just as a quick point here, and if you follow this, great, at least conceptually follow it. If you don't, if I take this trade, that's this 425, 445, and it goes up above this, and I take this off, and then I go do another one, and that goes up above that, and I take it off, and I go do another one. What happens is each time I take this trade off, I'm taking money off the table, putting it in my pocket, and now my new floor in the trade, if it does turn and go down, is where my last adjustment or move was, versus if I have the option, unless I sell it out, right, and then I've reduced, I reduce what my upside is, I could have this thing go all the way back down here, and of course, same with the stock, go all the way back down to where it started. And if it went all the way back down to where it started in your bull call, and you had rolled this a couple of times, you will have taken money off the table, be profitable in this position, and yes, you would have lost on that last position, but again, you've already taken a bit of that off the table in the process. right? So it's a little bit of a comparison of the difference between the two from the risk graph standpoint. Now let's take a look at this from the chart standpoint and see what we're looking at here. So in this particular case, the green lines here were my bull call spread, right? Where my break even was at 434 and my 100% return mark is at 443. Where the straight call option, my break even point was 464 and my 100% return mark was at 503. Now, I've been very involved in actually been helping people write margin engines, and I was actually director of options trading in Ameritrade for about 4 years and been involved with several different platforms. Last time I checked, the stock will probably hit 443 before it hits 503. Right? You know, it's a no-brainer, right? That obviously you can get there a lot quicker with this. And by the way, just a little note on this, my break-even point in the directional option, again, expiration break-even, is at 464. I'm already at 100% return before it even gets to the break-even point on the option itself. So a very powerful way to be able to leverage up in the position, define your risk, actually have less risk in the trade, right? So you can choose how much you want to put in on this. I did the previous slide, I did it by percentile, but you know, the one thing about this is if I were to do this trade with the option at a $39 option, I've got $3,900 minimum in the trade. Where if I'm doing the trade as a bull call spread, I have 900 and change in the trade. So it allows you to spread out your positions across more places, be able to work through some of that and get, have a higher probability of results and be able to play more stocks at the same time with the same amount of money. So that's a little bit of the concept of this trade in the bull call spread. So what I want to do now is I actually want to show you this in some live scenario situations here. And in this case, go over. Yes.
Rance, before you go on real quick. Hey guys, I know you guys have been typing a lot of questions and I've been firing away the answers as fast as I can. Keep in mind, I understand the questions you're asking in regard to the specific Netflix, but a lot of the other questions you're asking, we will get to in the presentation, especially now that we're going to pivot into the platform. So maybe just hold off and we will take Q&A at the end here. Whatever we need to, we'll stay as long as necessary to answer all your questions. So just see if we answer it along the way. The one thing that I do see coming up a couple of times here that I did want to answer real quick is somebody just said simply, how do you get out of the trade? Yeah, because you've bought one option and you've sold the other one, and all you're going to do is the flip of that to close the trade out, right? So Rance can talk about that one for a minute because I think that absolutely is a great question that applies. But the rest of the questions, what you're going to see now is going to be this stuff in the platform and how to kind of walk through these trades. And I think some of the other questions I've seen you're going to get answered here just in a minute.
So let's talk about exiting this, because it is a really good point, and it's something that there's a couple nuances to it, but let me just give you the direct one here first. What did I do to get in this trade? I bought the 425 call. I sold the 445 call. And I did this for a net total of 425. If I want to get out of the trade, all I have to do is sell the option that I bought. So I'd sell this one, and I will. I'm going to buy the 445. Now, mind you, just like you see the prices here are, the lower strike is more than the higher strike. Well, when you sell it, the lower strike is still going to be more than a higher strike, which means you're going to take money off the table. And as it goes up, that'll be profit off the table in that process. So literally all you're doing is buying back. It's frequently called unwrapping the trade because it's a multi-legged position, but you're simply going to buy back what you had previously sold and then sell what you've bought. One nuance I will tell you, and this happens sometimes, especially as you're starting to approach expiration, or if there's a dividend or something out on this, one of the things that can happen is, don't forget here, you've sold a call option, right? And somebody can exercise at any time between now and September 18th. Well, let me just share something with you. If somebody else exercises that option on you between now and that expiration date, so before September 18th, what happens is you're delivering the stock to them for 425. But you have the right to buy the stock for 4.25. Now I'm going to tell you a little nuance here, if it's before expiration and you still have time value left in this one, don't exercise this option, sell it and take the time value. You're going to have all the money you need to go buy the stock and deliver it for that. So actually, technically, you could actually end up with a little bit more than the max gain I've represented here if that's the case. It's a gift to you if somebody calls you out early in this type of a position. So yeah, I'm just unwrapping it, buy what you sold, sell what you bought, and you're out of the trade and neutral in the position. Okay. And by the way, frequently done. There is actually one other point here since we're talking about that. Actually, I'll show you that when we get into the live because it'll be more in alignment with some of that. So this is the Market Gear platform. This is the home page in the Market Gear platform. By the way, there's also customizable views and some other things like that. We'll get into a couple of those in a minute. I want to get right into the trades here. And to do this, what I want to do here is I actually am going to go over here to my my stock research, and I'm going to bring up the Netflix position. Now, in doing this, let me hit Netflix. Okay. And I'm going to go to the chart here. And what you'll see here on the chart is this is that trade that I was talking about, the 425, 445 position. Because one of the things you can do in the platform is you're looking at evaluating a trade. If it's a trade that you like, you can simply stage it for later. And then when you want to place that trade, be able to place it. So if I go down here to my staged orders, you're going to see here that I have Netflix in here ready to go. Right. So, and it gives me the ability to analyze that. If I click on this, it'll take me right over to this to analyze it. So, and in doing this, it actually, this is a great little thing to share with you on here. The, this particular screen, this is the options template screen. So we have about 20 some different templates in here, plus the standard call put chain capabilities and all that as well. But one of the benefits of doing it in this format is that the template, when you go choose a bull call spread, you will be in a bull call spread. It's going to be structured as a bull call. So my time frame has to be the same. I can't sell a lower strike than I buy and all that. So it kind of keeps you in alignment with what you think it is that you're trying to do in, not with what you're trying to do in the trade. Right? So, and then for our analysis in this, let me just share a couple other points with you. This is our risk graph. Now, I was showing you the risk graph a little bit earlier that looks like this, right? This is how the kind of the standard way it's done out there. What we've done is we kind of turned it on its side, and here's why. I want to see the price of the stock, right? So here's my chart, and I want that to carry over into the P&L graph so that I can see how that's playing. So now the chart price and the price on the P&L graph are synced up, and then I have my profitability in the trade, my potential profit or potential loss. Now, one other very cool thing about the way this is set up, you'll see here these dark red and dark green and then light green, light red areas. The dark green and dark red is where your action is, right? So as the stock goes up, I will make more money in the trade until I get up to my max gain. Now in the interim, there's still some additional, but at expiration, that is your max gain in the trade. And at the same time on the loss side, if it starts to go down, same thing. Once it hits that max loss, which is that 425 level, right? My max risk in the trade is at 425, right? The option I sold. My max gain is the 445, the option that I had, the option I bought, not 445, the option I sold. Right? So that's where your action's happening. If it falls below that, I have my risk of 928, but that's all I have at risk in the position. And if the stock, were to continue to fall while I'm at that loss, I don't lose more money in the trade. And then what we did was we carried these performance channels over onto the chart so that you could have that reference point on the chart as well. And notice one of the things about this, right? So you see your profit zone, and of course, I'll profit all the way up, but that's where your action is, and on the loss side. Now, this particular graphic is showing back to this particular date. Why that date? Why back that far? Because that's 94 days back, right? So this is a 94-day to expiration trade. But in this particular case, we're looking to play forward. However, you know, when we know that past performance is not indicative of future results, that was on that disclaimer thing as well, but we know we all look at it. So we give you the reference point for this on how that could play out, right? So, so you have that as a, you know, a reference to work with it. And then also down here, it tells you some additional information. It shows you your max return capability. So max return I could do on this is 116%. My debit in the trade, 928. Total cost for a single contract lot is $928. And of course, I could change that as I want to be whatever the, you know, if I wanted to put a couple grand in the trade instead, I could go up here and just click on the, I got this on my 5. So go back to the 1 and then go click on, there you go. So now I got 2, so now I got $2,700 in the trade, right? So very easy to adjust and work with that and get it where you want. So this is the position on this. Now, here's one of the things I wanted to share with you too, while we're talking about this on Netflix. One of the things I talked about was the cost of the trade. Now, the cost of trade, a very important factor in this. And one of the things that happens when you're trading options directionally or just buying that call option is there's a tendency to end up going shorter term because the option costs less, right? After all, what we're doing in this particular one, and by the way, these are current day prices. I mentioned to you that this was as of close yesterday. So right now, today on this, it's the call option is 45.65, and the higher strike call there, the 35. So this $45 call option, that's pretty expensive, right? So what tends to happen is people back in their time frame. So let's just take a look at something here. And what I want you to notice here is the $45 price of the option if we were to buy it directionally. I also want you to notice the cost of this trade, which is 8 to 11.15. And we'll talk about the spread a little bit. Right now, let's just go with the natural for that. Now, what I'm going to do is I'm going to go back in time, right? So this is out 94 days. I'm going to bring it back in time. Now, you can do that by clicking on here, and it shows you all the expiration cycles that you have available, and we could certainly choose that way. But one of the other ways that you can do this is we have our rolling icons here. So this will move it up and down. This will move it back in time. So notice 11.15 for the trade, $45 for the single option. If I start to back this up, 66 days in the trade. Here we have 45 days in the trade, right? So let's just look at that. My option dropped a little bit, right? So 37 versus 45, but my cost of the trade didn't really shift that much, right? So the point being here, I can go out further in time, right? So here's my 94 days at 11.15. Let me go out another one, 157 days, and that's a $57 option, but my spread only cost me $10.50, right? So it's not that much different because I'm both buying and selling time in the trade. It radically reduces the impact of the cost of time in the position. So it lets you be able to put on a trade more suited to the timeline that you want to do. In fact, my personal, this is my personal trading style with this is that I always, if I'm playing a trend, if a stock's trending up and I'm going to do a bull call spread to capture that trend, I tend to go at least 50%, if not double the amount of time I think it needs to get through that distance based on the chart, based on my technical analysis. Why? Because if I'm wrong, I've got some chance for it to come back. I've got some better chance to be able to do some of the repairs I was talking about and all that. And that additional time isn't really going to cost you that much more money in the way that this is set up, right? So again, if I come in here and I look at this and so, you know, and I mentioned already that on the chart, it's showing up here as a stage trade that I'm considering doing. Let's go back over here to the options page here. I have this position, and let's say I decide that I want to go ahead and place this trade. And to do this, I'm actually going to go to this account for a moment. And so now I'm going to go place this trade. When I place this trade, watch what happens. So it immediately comes up with the position, shows me the position, carries through the price I want. And I'm going to go ahead and hit that review button and place that trade. Now, immediately that trade is placed. You'll also notice that not only did I have, we'll talk about that a little bit. Not only did it tell me successful that the trade was placed, you'll notice here there's a place where I can now add journal notes. And while we're going to do this, we're going to talk about this later, but I'm going to go did this as a hashtag demo. And we'll talk about why that's important in a moment. But I can put notes in on why I did this trade. I can put different tags in about it, all that stuff, so that the journal can have that information for what it's going to be doing. Right? And again, we'll get to that in a second. So that's that position. Now, if I go back over to the chart, by the way, you'll notice something else on there. You'll notice now that instead of this being the dotted line that it was, it changes to a dashed line. That dashed line means that it's a live working order, right? So it's, you know, it's no longer, it's a dots or things you're considering. When it's live working, it's going to show you the dashes. And then once I get filled and it's actually in my portfolio, what you'll see here is that, actually, let me do this. And just show you this a little bit, right? So in this particular case, this happens to be a bull put spread, but it shows me the position I'm in. So you'll notice here the 210p for put, the green line means I bought it. The 230 put, the red line means I sold it. So I'm in the 210, 230 spread, right? So in the case of the Netflix, I have that one out there working for me. I have the 425, 445 call spread, right? So that is that position, right? So having said that, let me share with you just another one here that I wanted to talk about, because it's a, you know, one of the things that happens here is that, you know, you start talking about some of these trades, they can get, on the option side, they can get pretty hairy. They can get pretty expensive. So for example, here, I'm going to pull up my position here on Amazon. And in Amazon, look at this is a $2,600 stock. And in this position, if I were to go out and buy, again, I did the steps here, 3 months out, the 25.75 call option, that's currently going for $200 a share for the option. So the, you know, if $200 a share times 100 shares is a 20 grand trade. This is an expensive trade to be able to do just a single lot on this. And of course, 2,600 per share on this. So, so it's a pretty darn expensive option to be working with. And so what happens is, and I really like using this as an example here, because as I talk to people trading, it's like they're just, it's out of their comfort zone for this. And you know, that's really important that as you're doing your trading, that you don't want to do trades that because of how much you have in it, all of a sudden you're making emotional decisions versus, you know, following your rules and your disciplines. And so when you go with a higher price, it can really cause an issue, right? So in this particular case, what we've done is we've done the bull call spread here, where instead of paying this $206 for the trade, I have this spread here. And in this particular case, let me work that a little bit and get in here. So we're at about 1018 for the trade. That's in between that bid-ask spread versus $200 a share for the option. And what this does, again, let's take a look at this with the stock here at the 215. Here's one of the things that I did with this. In fact, actually, let me show you something. I want to show you another adjustment to this. So what I did here was I did this all the way out to September. But one of the things that you can do here is you can actually play this a totally different way, right? So I talked about playing the trend, riding out. Let me share with you one other way to do this. And what I'm going to do here is I'm going to change my timeline quite a bit. I'm going to back it back down here to more like, let's go with 30 days out. So July 17th, so 31 days to expiration. And now instead of using the 2620 position, I want to get this down here a bit. So I'm going to position this a little bit different. Now I'm going to use my rolling icon up here, but what I really want you to focus on is the chart down here, right? So I'm going to, I'm simply going to roll this entire position down where I can get it where I'm more comfortable. Let me just widen, I'm actually widen it out this way. And I want a $20 and then get down here where I can get it where it's at that support level, right? See that support level here on the trade. I go one more and see how that's working out, and then work my spread. right? So what I just did here is I moved it down to where it's at support, right? So where's my break-even point on this? Let's take a look at this. And, you know, I can do the math manually, or we can just look at the numbers because it shows right here. My break-even point in this trade is at 25.34. Where's the stock right now? 26.15. So I literally have an $80 buffer where the stock could drop 80 bucks before it gets into me being at risk in this position, and lets me be able to take advantage of that. So now, where's my max gain? Listen, my max reward here is at 25.40. Now, mind you, again, the stock is at 26.15. So in this particular case, if all the stock does is stay above 25.40, $65 away from it where it is right this minute for the next 30 days, I make a 37% return in this trade. And I have a total of $14 a share in this position, or if I did a one lot, $1,400 in the trade, versus if I'm buying the option, it's $154 a share for that that same 25/20 option. Right? So again, high probability. And I really like the fact that on here you can see it visually, and you can just set it up so that it's right underneath that support level, so you're comfortable with the trade. Now, again, this being a much shorter time in that trade. And so in this particular case, let's go ahead, and I don't want to do one lot here. I'm going to do, so this is my, so let me just go ahead and add to that too. We'll just add another share. By the way, almost everywhere in the system, you've got bid and ask or click points to be able to execute or add to or subtract from a position. So now I've got two contracts, total cost of the trade, $2,900, $1,000 gain potential, 37% gain potential in the trade. If I decide I want to do that, simply click, be able to review that trade, and place that. There we go. Be able to place that trade. Sometimes with Zoom, there's there's a little bit of a latency, but there we go. All right. So we have that particular trade there as well. So those are two of them we have working for us, right? So that's a little bit of how to do this. And again, you can do this by that shorter term viewpoint or that longer term viewpoint. Just as a quick little note here, if I go to my staged orders, there was there was a couple other ones that that I had looked at. One was Adobe. And before I get to that, though, there was a couple of questions. So Chris, do you want to jump in here? And
yeah, just a couple of, well, basic thing. A lot of people asking one question, which is, well, is this recorded? Yes, it is recorded. So don't panic if you missed part of the presentation, if you came in late, or if you have to leave early, or maybe you're already gone, in which case me saying that doesn't help you. But yes, it is being recorded. So everybody will get an email of that. And then the other one was, and I think this one just got answered, I hope, but somebody said, why are you showing expensive examples? Most of us can't trade Amazon. The whole point of showing you that example, I think what you got from that, I hope, was that you can trade Amazon for very small amounts of money. That entire trade he put on for one contract was only like $1,400, right? So this is an option strategy that allows you to put up small amounts of money and trade more expensive stocks. Now, obviously, that doesn't mean that's what you have to go out and do with it, but that is definitely the point of teaching you this strategy, is that it does give you a way to trade stocks regardless of price at a much more reasonable amount. I do know, just looking at the clock here, Rance, we might want to just go to the news stuff.
okay.
And it's not as easy as, by the way, if you go to Oracle, because they did just release earnings after the bell, and this will be a little more indirect way of how to use some of the news guys, because obviously you've got you'll have a scrolling Benzinga news feed on your homepage. But as he brings up Oracle, and we go to the Benzinga news tab for Oracle, what you'll see is that they just released their earnings. Now, let's say you're on the homepage of our site and you're watching scrolling news come by, and you see Oracle's earnings come out, right? And so you click on that particular story. There's just the headline. That yellow area, if you're familiar with Benzinga, they did this great thing called "Why is it moving?" where they talk about what's causing major price movements. I don't know how you'd think they'd have a staff of 1,000 people to be able to cover all the stocks that they do and put these little comments up. But it's a real short way of explaining what's going on in the stock every day. They cover the whole market, or not every single stock, but just about. And but if you click on any of the stories like that, you can see the second one down there is the main headline, Oracle mixed Q4 earnings. So let's say we see this scrolling news come by and we look at it, we go, wow, Oracle, okay. In this case, they missed, right? But look at this. With this, there's the symbol there at the top in the article, and there's also one below. We have it tagged either way. And if you click on either one of those from wherever you were, that you got the headline within the platform, and keep in mind, some news stories, right, it might mention one company, but then it might list others that are related in the industry, and you want to go to some of those others. By clicking on that, it brings you straight here to the overview page of Oracle, which gives us some basic information. And I know that we've already shown you options, so obviously you could go to the options page. There's the chart page right there. Rance, you might want to just really quickly though hit the fundamentals so that they also get an idea of what's here. So this is our view of, you take a news story and you hop straight to a stock that you see as the headlines scroll by, and you realize that there might be some interest and you want to do some research. You've got your your chart template laid out the way you like it, which is what he just pulled up. And then if you want to do some fundamental research, you can get straight to the fundamentals very quickly on any stock, and then dig into those fundamentals. And Rance, you want to hit that fundamental tab? There we go. And so now we've done a visual representation of a lot of things. And I'll let Rance carry it on from here, but this is what we want you to understand about the Benzinga news integration, and he'll show you the icon for the squawk as well. But it's really designed to be able to take news stories as they scroll by and get straight into, how do I find out about this stock? How do I look at it? How do I analyze it? However I want to analyze it. Maybe you're an options guy, maybe you're a stock guy, maybe you care about the chart, maybe you care about fundamentals, but you can get there in very few clicks. And actually, I'll say one more thing before I let Rance take it over again. The speed you're seeing on this platform, and I realize with Zoom there could be a little delay every once in a while, just the way it broadcasts, but the speed you're seeing here, this is a browser-based version of the platform. Okay, we have a downloadable version for Windows and for Mac. We have mobile versions that are equally fast, but this is the browser-based version. And the reason this platform is so fast and pulls up everything is because it's designed as what we call a progressive web app, which means even though it's in the browser, a lot of the information is stored on your computer, and that's what gives it the speed. You're probably not going to find a lot of web-based applications that do all this with the speed that they do. But I'll let him show you the fundamentals real quick, and then and maybe he's got a comment or two left on the trade journal, and then let's take some more questions directly.
So one of the things that we really built this with a focus on speed of being able to get in and get it done. So this is a dashboard screen where you see the score. We didn't have really time to go into the score today, but the area here is, technicals, inner circle, valuation, and fundamentals, and it scores it for you. You come into the dashboard, you get a high level view of this. So let's use fundamentals as an example here. And I can see very quickly how they're doing in growth, how they're doing in profitability, cash flow, some key ratios and earnings. But if I want to go look at this deeper, then I can go see how they're trending in these different areas. So I can see, well, we have good sales growth, return on assets kind of flat, which is why it's yellow, kind of neutral, right? But then if I decide I want to go in even deeper on this, we have earnings analysis down here, but if I want to go in deeper, the information's there. I can click on profitability, that's going to be P&L, right? I've got my balance sheet available too and all that, but from it, and then I can drill down to whatever level I want. But the other thing we did with this was we also made, if you're going to look at it at this level, we also color coded it so you knew what was improving and decaying before you even really looked at the numbers. So the whole idea behind this was make it quick and easy for you to be able to assess the information, and if you want to go in and look at it further, you can drill down into it and see. Same thing here with like the insiders, which is inside inner circle, insiders and institutions. I can actually go see what institutions hold this stock, how they've been holding it, what's been going on with it, and all that, and literally see. I can see graphically how they've held this over time and all that. So it's a really powerful way to be able to analyze very quickly. Of course, we have things like alerts and all that stuff in the platform as well. But one of the big things is that speed at being able to evaluate it quickly, and that gives you that ability with just a matter of a high level view and then drill down to where you want. And one of the things we were talking about that actually I just want to mention here was he was talking about the news. And this is something I saw just before we were looking at this today, and shows you that exact same kind of idea here. I'm looking at ABBV, which I actually have, I trade ABBV a bit, and I'm looking at this, and I noticed that there was this Benzinga "Why Is It Moving" article, and I look at this, I click on this, and I realize, oh, there's some other companies here that are feeling the benefit of what's going on in the health sector right now. And one of them in particular that I'm not in right now is Amgen. So I saw this, let me take a look at this. I come over here and I can do my quick analysis on this. Let me go over here to the chart for a moment and be able, now we're talking about, there we go. So you see this showing like some resistance pulled back now. It's popped up a little bit here on this news. And let's just say, for example here, we see this news, we see it, we do a quick analysis on it, we check it out, we decide we want to take action on it. I can, that quick, I can come over here and create the trade that I want, right? I'm actually going to narrow that a little bit. And just like a $15 spread here. And then I'm looking at my trade. I've got 14 in it, so I might want to move the trade up a little bit. Set it up how I want. Again, looking at my visuals on this, take advantage of the resistance piece right here. I don't want to push my break even all the way up there. So decide, this looks good to me. Decide I want to do this trade, and that quick, literally, I can go ahead and let me work between that spread. By the way, if you don't know about getting between the spread, and especially in multi-leg orders, it's a lot easier to get between the spread on a multi-legged order than as a single, because you're sending out both sides, right? So a really cool thing to be able to do. So my whole cost of this trade for one lot's $1,000, even though I'm trading a $226 stock for that many shares, for 100 shares. So I have that trade now on as well. Right. So real quick way to be able to go from that. Also on your custom page, you can have a full on, this was that Zoom thing. This page has a tendency to slow down. There we go. And by the way, this is Zoom, not the platform part on that. There we go. There it is. So on this, I can set this up however I want. I have my market news coming down here. I can see things are going on and be able to jump on and be able to take action very quickly on it. Here you're seeing the dash lines are working orders. My dots are ones that I'm considering, so on. I have all that working for me on this. So we've done several trades in this today. So what I want to share with you is one of the really powerful parts of the platform is the trade journal capabilities within this. And just to show you this, as we load this up here, what this shows you, and let me slide down to some that are closed out here, right? So what this will show you, and these are color coded. Blue means it's an open trade. Red or green means it's closed, and the green means profit, red means loss, as you can see here. So if I look at these, I can see the day I got in, the day I got out, how many days in the trade, and my profitability on this. Notice it knows what the strategy is, but I can tag this any way I want to as I'm doing these trades. So for example, in the trades we did today on Netflix, I did this as a demo, right? So it says live trade, right? Versus one that you're in is going to say it's an open trade. It's a live trade. It says it's a bull call. It knows what it identifies 67 different option strategies. We can also tag it however else you want. I highly recommend you tag it how you found the trade. If you found the trade through one of the scans, we didn't really take time to go into scans today, but if you use the scans, we have a bunch of predefined scan. Like if you want to find stocks that are trending higher, there's a whole bunch of different scans in there. So if you find the trade from that, it automatically tags it that. But let's say you're watching, Kramer on Mad Money, and you tag it Mad Money, or or you came out of Wall Street Journal, you tag it WSJ. It's very, very powerful to do that, because then what happens is you get your analysis over here on how you're doing with this. So for example, here, if I look at this, I can see on these, we're talking about bull call spread today, so let's take a look at that. Here I have 23 bull call spreads that I've done. My average profit is 1848 a trade. I've won 78% of the time, and my average time in trade 66 days of the trade. Then what this will do is it'll take for whatever time frame, because you can look at this defaults to 1 year, but you can look at whatever time frame you want. You can look at multiple accounts. This trades direct with your brokers. You know, all the majors that have API connectivity we're connected to. But then it also shows you your totals down here on how you've been doing as well. So you can, you know, my average P&L 977, total profit 139,000 for 143 trades, right? So you can see that. If I want to get into deeper analysis on this, I can go in here and let's say I just want to look at my bull call spreads. So I'm just going to look at that part for a moment. And in doing so, now it's going to filter this to just the bull calls. And I can see here again that I've done 23 of those. Average profit, $1,800 a trade, 76% win, 66 days on average in the trade. And here are those bull calls. So one of the really cool things that you can do here now, if I go in, let's take this one here that's closed, this ABBV. It shows me here that I was in the trade for 64 days, right? $1,800 profit in the trade, and shows me the opening and closing. I can open this further to get a lot more granular detail. I can also edit this and add in additional notes or tags or whatever. So I've got that available to me. And then one of the other things about this that's very cool is if I want to go and I want to do some additional analysis on this trade, if I click this little backward clock button, it'll actually take this trade and send it over to the options page in the backtest mode. Now, we didn't talk about backtest, but just to let you know, it has backtesting. In this particular case, instead of backtesting some theoretical thing, this is actually giving me the ability to look at the actual trade I did, and I can see how it performed, right? So I can see here what my entry cost was. This is what I actually entered for. What my exit was. My profit in this case was $1,800 or a 66% return. And then I can actually see how this trade performed on a day-to-day basis during the life. So this is the whole life of the option. Let me get rid of implied volatility for a moment. This is the whole life of the option, but this is the life of the trade that while I was in it, right? So this shows me the day I got in and the day I exited, shows me the area chart in the back is the chart of the stock. And then this is literally my day-to-day performance of my trade throughout the holding of that position. So backtesting is a great thing to use for mastering the trades, but it's even more powerful when you can take an existing trade out of your journal and be able to look at it in that kind of a format as well. And a really useful way to do that. In addition to that, besides your tag analysis, which will tell you how you're doing in each of these areas, there's some additional things here where it graphically shows you how you're performing. It compares to S&P 500. It shows you length of time in trade. You can actually zoom in on all this too. So it shows you how long you've been in. Each one of those represents a trade. You can hover on it and see which one what they are. And then if you click on the insight, it gives you some additional thing on how your portfolio is growing and your winners versus losers and how that's playing out. So you can get additional information here. Now, Chris said at the introduction that this has become one of the most powerful parts of the platform. And, you know, I'll tell you that the feedback that we get from people is that a lot of feedback on the journal, but one of the common ones is I stopped doing what wasn't working for me. And my results got a lot better. And then they start going back and doing, and by the way, we support virtual accounts here too. So you could go in and then do that stuff in a virtual account and be able to play with it and get better at it, and then come back in and do it for real. But it's a very, very powerful part of the platform to not only look at what's not doing well, but also what is working for you and how to continue to be able to drive that forward. So a very, very strong part of this. Right? So we mentioned the news. I just want to mention one other piece real quick, and that is the squawk. It's such a simple function, but yet so powerful, is that the Benzinga squawk audio feed, this little thing up here, you click this and you start the squawk. And I'm not going to have it because you won't be able to hear it through the Zoom thing right now. But the way this works is it's like GPS, right? It's not like a news channel that's constantly talking. It's like GPS in your car. When it's time to make a move, it says something. Otherwise, it's quiet. Same thing here. When we first started evaluating this to put this into the platform, I'll tell you that we spent a couple hours on it just listening to the stuff and doing trades because they were so actionable in what they have come in here. It's not fluff information. It's information that is very actionable to be able to take. And again, we have Benzinga Squawk integrated here. We also have the full Benzinga newsfeed integrated in here, and the in the real-time feed of that as well. And we're excited to be partners with them on this, and very excited to be the currently the exclusive Benzinga on the go function as well, where this squawk is something that you can have going on your phone while you're on the while you're traveling or out and about. Even if you just have it sitting on your desk, when something comes up you need to take action on, you hear it, and bam, a couple clicks and you're right in there to be able to do that. So we're excited about having that integrated and part of the platform. So with that, I want to turn it back over to Chris for Q&A and anything that we wanted to touch on here, Chris. So back to you.
Can you throw up a chart again that has some of your trade journal history?
Oh, actually, thank you very much for bringing that up, because that is something I did want to show. So one of the things I had mentioned earlier was that we have, when you have a trade on, it shows up on the screen here. It shows you that you have that trade going on. You see those lines going across. Well, not only that, like for example, here I'm in Facebook. You can see this down here. But when you close out a trade and it's in your journal, it also shows up on the chart. So you can see here, and I made these a little darker, you total color control on this and all that, but so you could very easily see it. But here is this opening trade on a bull call spread that I did in December 20th. And then it closed out right here. And with that, we made a $3,600 profit. You see the price it was when I entered, the price it was when I exited. The fact that the line's a green line indicates that it was profitable. By the way, that little circle, it's an options trade. If it's a little diamond, it's a stock trade. So you know that right away. So you get to see not only your current positions on the chart, but you also get to see all of your previous activity on the chart as well. So here you can see all of these trades, and you can see how you've been doing with it as well. Again, a really powerful element of of this for getting better at what it is that you're doing.
Right, exactly. So, and that's one of my favorite things on the platform, actually, is just once you get going with a lot of trades, to be able to go in the journal, see, okay, what kind of bull call spreads have I done? What kind of long stock trades have I done? And then to come over to the chart and visually see where you did those trades and understand, hey, this worked because the market went up, or this worked because the market didn't. Maybe that was the type of trade I had on, or maybe this didn't work. There's a red line that looks like it's something that should have worked, right? So it lets you see visually a lot of what's going on, and that's what we really, really like. Let's see, a couple questions in here that I saw. Do we have to customize the chart? Yeah, I mean, the chart has we have lots of indicators. Every indicator can be customized. You can customize the colors. You can customize just about everything on the chart. And also, once you load up any specific thing, if you look at the right above the chart on what Rance has going here, you can see every little thing has like a settings little box, and then an eyeball, and then an X, right? And that eyeball lets you turn on or off any one of those things. So if you don't want to, if the existing positions is bothering you at the moment, you can hit the eyeball and it'll go away. So anything that you just don't want to see right now, and you want to focus on the rest of the chart and the indicators, everything is easily, but it's still right there. The minute you want to turn it back on, it's there. And you can save the templates, and multiple templates, of course. You can have multiple watch lists. And there's all sorts of stuff. Look, guys, we haven't even dug into everything. I will let you know there is a 2-week trial currently for the platform. If you go to marketgear.com, the pricing page is up there. There's 3 different packages. The Benzinga integration is in the master kit. To get the news and everything does cost more money, but obviously we feel like it's worth it. The audio squawk alone is worth the price of admission. If you take the free trial right now, that includes the Benzinga. A lot of times the free trial will just be the platform and not the Benzinga news. But right now, because we're just launching with them, if you take the free trial for 2 weeks, you will get that. And also, right now, we are going to be scheduling a couple more trainings on the platform itself for those that get in over the next 2 weeks. So we'll do one that's a little more focused on stocks. I did get a bunch of questions today. Is this platform only about options? No, that's what we were training on today was the bulk call spreads. But you can see from the charts and everything, even if you're just a stock trader, you can get quite a bit out of this in terms of the fundamental evaluations, in terms of the charting, in terms of the news, obviously, if you have the Benzinga integration. So no, it's not just a platform designed for options. That's just what we wanted to focus on today. We thought it might be a little more for some people than just getting a stock presentation. But we will have a training to show you how to focus on the platform, focus on the features of the platform if you're a stock trader over the next 2 weeks. So for those that get in on the trial, you'll get emails about that. And then we're going to have one that goes into sort of a wider array of the options stuff as well, not just focus on one. So if you are interested in market gear, again, the master kit is the one that includes the Benzinga integration. It is part of the free trial right now. And
by the way, if you do that, because the next Tuesday, we do evening for this. We do a 7 p.m. East Coast, 7 p.m. West Coast. It is also recorded and available. But next Tuesday is the stock one, and the Tuesday after is the options one. And you'll be able to get both those in during your trial period before you have to make any final decision on that if you want to get in that. But definitely comprehensive on the stock side as well. We didn't want to make this a demo as much as we did an instructional thing on the bull call. So there's a tremendous amount of functionality we did not have a chance to get into today that we'll be covering in those trainings.
Yep.
And those are free as long as you have access to the platform.
Somebody said these tools are incredible. Can you briefly highlight some features that set you apart? I'm going to drop a link here in a text right before we end this into the chat room. Actually, let me do it now and post it in here. If you get a chance afterwards, you can take a look at this. This video will kind of highlight at least a lot of what we've built in and designed over the years that kind of make the platform stand out. I'm trying to go through a few of more of these questions. Where can I find videos that explain in depth how to use this? So again, once you're signed up for the platform or in the trial, we have an entire extensive help center that literally has videos about each broken down. We have a long video that walks you through the platform from start to finish, and then we have broken down videos that show you each segment of the platform. So if you just are like, hey, I just want to learn about the stocks or whatever, that's great. We can do that. If you want to see the whole thing from start to finish and how to build the whole platform up, you can. Somebody mentioned that they've seen this platform in other places. Yeah, no matter where you've seen this platform, even if you've seen it under a different name, because we do white label for educators, you will be able to still, the main point for you today is that you will still be able to add the Benzinga news to those versions of the platform.
In fact, if you have the platform currently, when you go to the BZ News, anywhere in this, whether it's on the stock or on that custom page, at the very top of that, you'll see a link that will take you over to the info about how you can add on the Benzinga part of this, if you would like. And by the way, this is the Help Center. Right in the platform, there's a Help Center button that'll launch this Help Center. Again, there's quick guides, extensive user manual in the video library that Chris was mentioning as well, that dives into each of these in a topic specific things, so you can get into just how to use the charting and all that. One of the first things we talk about is how to set up a virtual account so that you can start trading, at least practice trading instantly within the platform and all that. So that's part of that Help Center content.
Yeah, and we do have, somebody's asking about pricing. We do have, or if we have discounts for annual pricing, we do have discounts for annual pricing. You'll see that on the pricing page of the site. Put verticals. Yeah, Rance, if you could just go back to an options page and just drop down the list of options strategies that we lock in, just so they can see. If you are an options trader and you already know a variety of strategies, these are all built-in templates. So again, one of the things Rance stressed when he was pulling this up was, if you pick a template, like obviously if you don't pick a template, you can build your own options trade right off the grid there. But if you do pick a template, it will make sure that you don't do anything that takes you outside of that template. Very important, because a lot of people, oh, I want to do a bull call spread, but then they start typing their own strike prices in, and suddenly it's not a bull call spread, and whoops, you put the trade on, and then it wasn't what you were going for. So these do keep you in the strategy that you're looking at.
And by the way, this is the option chain view, right? I just want to share that really quick, where I could go in and create a position really easily here by, let's just say if I click on the ask here, the bid here, here is my bull call spread, right? So I can build it manually off of this. I could also enter in quantities, right? So standard chain view. But one of the things I think it sets us apart is, are these templates, because it cleans the screen up, gets you just what you need to be looking at the moment, and gives you insight in both visually and in the calculation of the P&L numbers, so you can be able to do that. And then, of course, when you're in that backtesting mode, it actually gives you the analytics of the backtest on the right-hand side too. When not, it gives you a snapshot of the trade. So really comprehensive capability within those particular templates.
Yep. And then I just went through, I saw one more question I wanted to answer. Guys, if you are asking me about if you do have a white labeled version of the platform, you're looking to add Benzinga, it may be that your version hasn't upgraded yet. I don't know. So let's wait a day or so on that and make sure. There's a lot of different versions out there if you're working through an educator. So just give it a couple days, and then if not, submit a support ticket. We'll figure it out. I know it's already out there for some. I saw one more I knew I wanted to answer. Boy, a lot of questions. Thanks, guys. I'm going to actually give you my email as well this time, and let you email me any questions you have even after this. I'm going to type it here in the room, but it's chris@ivestplus.com, and you can feel free to email me with any questions about the platform once we're done with this as well, or for those who view this recording. I don't think I lost the, scanners. Somebody asked if there were scans in the platform that would help direct you to a trade. Yes, we have some preset scans that look for both some options, some stock setups, certain stock setups that you can then use to jump to the options, or some that actually will try to find the options for you specifically. But again, depending on what you're looking for, there's a lot of different things built into the platform. And just to give you a hint, I don't know, I don't like to generally talk about the future too much, but we are looking at we are in the process of looking at and speccing out and building a more complex scanning system where you can basically write your own without code, not like a coding system, but where you can sort of pick your own parameters if you know what you're looking for, and it's going to be pretty detailed. Guys, I do want to touch one more thing. Yes, there are alerts. That's the other question. I did want to touch on that. There's alerts in the platform, and that's what's nice about the alerts is, and we're still adding feature sets, and one of the things we're working on right now is in the alert category. So obviously you can set price alerts, and they'll pop up right here in the platform. This is where you can set them, but then you'll get the notification on mobile, or you get the notification here in the platform. We're working on the SMS and email alerts as well. Then we're also working on some fundamental alerts. So if you want to set based on earnings coming out or earnings exceeding on a stock or any of that type of stuff, we're also doing, we're looking at certain types of alerts where you could basically have an entire watch list, and you have your favorite watch list, your favorite 50 stocks, let's say, and you can view our watch lists either in graphical form like what Rance has up here, or you can switch it to a text list of the stocks. But either way, I can take a watch list right here, and I could say, hey, if X happens, and again, certain things, if X happens on any one of these stocks, let me know. So you don't have to set the alert individually for each of these. Somebody asked about virtual accounts. Rance mentioned it before I had a chance to answer. We do have virtual accounts. You can open one very easily. It takes a couple of clicks. It is provided by ChoiceTrade, which is one of our connected brokers. They do provide the virtual accounts. And then I did want to mention, so we do connect to ChoiceTrade, Ally Invest, Ameritrade, and E-Trade. We connect, and we're looking at other brokers. We connect to any broker. We will connect to any broker that has an API that can handle the things we need. And so if they've got an API that can handle multi-leg options and stuff like that, if they don't and they're interested, we'll help them out. That's been done before. So we will work with any broker that fits those criteria, because we need all that really to get the platform to function the way that we like it.
Oh, by the way, just as a quick thing on the watch list alerts or even individual stocks, one of the things that was a request here that is going in are things like you could say on a watch list, I want to be notified if any stock on this watch list hits a 52-week high, or if anything crosses its 200-day moving average, that type of thing. So it allows you to set a broad parameter and be able to do that. That release, by the way, is less than 2 weeks away. So that's very, very close, but the standard alerts are currently active. And as Chris mentioned to you, it does push notification to your phone, And with the mobile, you can get to it very quickly and be able to do a trade there, as well as in-browser notifications. And of course, if you're in the platform itself, of course, it will notify you there as well.
Yep. Basic questions are says yes. Yeah, Gene, reach out to me on Chris at iVest Plus on that one. What's the difference between the signature kit and the master kit? Master kit adds Benzinga. So if you're on the pricing page of the web, Rance, why don't you go ahead and pull up Market Gear and go to the pricing page just so we can be clear about that, guys. We have a variety of different packages here. Everything from somebody who just wants to start casually playing with the market and getting some data and looking at some charts and stuff like that to all the way to the advanced. So there's 3 packages on the platform. This is what we call Zoom delay because the website works well. So there's the essential kit, has a lot in it. Basic options change. There's news in there, some basic news. It doesn't have it is a little bit of a delay on the news at that price level. Guys, news is expensive. That's it. News is what drives the market, right? So at the end of the day, having news built into the platform does cost money. The middle plan, the signature kit, has basically all the features that you would expect out of the trading platform itself. Positions and orders displayed on the chart, the fully functional trade journal, the virtual accounts, live account trading if you have one, the options templates. Everything's built into that you would need. And then the master kit adds all the real-time Benzinga features. There are Benzinga features on delay in the other versions, but the real-time news feed, which has a lot more feeds in it, and it's real-time, the Benzinga audio squawk, the Benzinga why is it moving today, and stuff like that are all built into the master kit version of the platform. There are annual, yes, as I said, there's discount pricing for annual. I don't know the answer to that one, so I'm gonna. Somebody asked, maybe Neil knows this one. Does Benzinga have access to the Bloomberg terminal that spots unusual options trading?
Benzinga has unusual options tracking. I'm not sure, to be completely honest, how it's presented on Market Gear. But that's something I would recommend grabbing a free trial and looking into. However, that is something we track. And we don't source it from Bloomberg. We have our own way of sourcing unusual options activity.
There you go. Just another reason to have Benzinga.
By the way, sometimes those come across the squawk also. And that's one of the areas that we found that was delaying our development because we kept trading off of the squawk feed. It was kind of a interesting little couple days when we first started looking at it. So definitely have some of that in there as well.
Let's see, it's starting to
Get out there.
Slow down a little bit. Can you describe Benzinga in a bit more detail? I mean, I don't know what else. Look, a lot of news feeds. Oh, you know what else? Rance, if you can go to the Benzinga page on the site on Market Gear itself, maybe back out to the homepage and then click the, if you go to the homepage and click on the thing under the banner, it'll take you to that page. And that does sort of break down, is that slow to load? There we go. Wow.
Yeah, it's
everybody's hitting it right now. Here's the Benzinga page. So I think there's a lot here for those who are asking about that in terms of what you get in the various packages, but it breaks down what the news sources are. And again, keep in mind, with the Essential Kit, there's some news. With the Signature Kit, there's some news. Both of those are slightly delayed. Okay. The Master Kit is not delayed and actually has a lot more news. Okay, so that's really, I mean, news costs money, guys. We all know that, right? That's everywhere you go to get real-time information, especially at the caliber that Benzinga delivers it. It does cost money, and then you get the audio with it too. So that's the difference. Email mentioned something about a Benzinga boot camp. That's actually a different email. There's a boot camp coming up with Benzinga later on this month, I believe, and you've probably gotten that email as well. Can you filter any of the news of Benzinga? No, the news comes in a streaming one, and then if you pull up a stock, you will see the news just on that stock. If you're looking on like a homepage widget, it'll be showing you everything that comes through. Why are there higher prices? One is the monthly price, and one is the annual. The per month price, if you if you do an annual membership. So you get a discount for signing up annually. But either way, any of these packages, you do get the 2 weeks free. And like I said, that does include Benzinga right now. Are we able to import our current trades in the system so we can track? Rance, I'm going to give that one to you.
All right. So there's two ways that can happen. If the trade has been done at any of the firms that we connect to in less than 2 months ago, when you connect to that account, it will immediately bring those trades in. And they will be in there so you can track them. Now, that's, by the way, for the journal functionality. If you have it connected, the trades are going to be there, right? Because it's pulling the trades in from the API, your current positions from your broker. So all of those will be there. But from the standpoint of tracking them and using the journal capability, if you've ended the trade within the last 60 days, it will automatically sync up to that. If there's trades you want to track through that are further out in time than that, the answer is yes. It's through what's called a manual account or a logging mechanism. And it is in there. Rather than going with how to do that, it's in the help center on how to do that, or you could certainly reach out to us if you want to, and we'll be glad to share that with you. But it automatically pulls up the last 60 days of trade as soon as you connect with your broker.
Okay. I think that's about it, guys. Again, feel free to email me. Marlene, again, there's 3 different prices for the different packages, and then there's an annual, which saves you, like, if you just look at what it costs monthly, if you pay up front for the annual, you get for 12 months, you get the price of 10, essentially, somewhere in there-ish. That is part of the manual. Somebody just asked, can I cancel at any time? Yes. If you do the monthly, you get 2 weeks free. Then you go to a monthly. You can cancel at any time at the end of that month that you paid for. And yes, you can also upgrade to an annual at any time along the way. We do connect to Ameritrade, E-Trade, Choice Trade, and Ally Invest currently. And guys, for those of you asking about this versus the any white labeled version, again, it's a totally different thing. It's the platform may be the same with different colors and stuff like that. The Benzinga news will be available to you in the white labeled versions. So you stick with your white labeled version if you're working with an educator. This is for individual people that don't have an educator but want all these tools like the trade journal, like the options, like the stocks for themselves, and now obviously with the Benzinga news. So there's 2 totally separate things. If you're already working with, I won't mention any of the names specifically, but if you're already working with any of the white labeled versions with educators, that's where you should most likely.
If I can just make a quick mention of that so that they know, because that's come up a few times. When you go into anywhere that there's news, you'll see a BZ News. That should be there now. Since we just made this announcement today, the press release went out. This was our first official launch of this with Benzinga. For some of you, it's already active. If not, by tomorrow morning, when you go into Benzinga News, there will be a line right across the top of here that says, for more information about this, click on this, and that will take you to an info page. It will give you the breakdown on how to be able to add the real-time Benzinga capabilities to the platform. So anywhere you see Benzinga News, there'll be a banner or a line right at the top. You can click on that, and it will take you to that information. Again, some of you already have that. If you don't, by tomorrow morning, you will have.
There it is.
All right.
All right. Well, guys, we went way over, but I appreciate what a lot of people stayed. So I appreciate everybody sticking around. And like I said, happy to answer any further questions. If you want to email me at chris@ivestplus.com, and we will do that. But again, this is, we're happy to be here. We're happy to be working with Benzinga. And, we can talk again soon at one of our next training sessions and show you more about how to use the integration.
All right. With that, Neil, we'll turn back over to you if you want to say a final word or wrap up.
Yeah, I'll pop in and just, I'll just echo what Chris said and say, thank you everyone for spending so much time with us today. I will say personally, as a watcher for most of this, I am very into what you guys are doing with your platform. I really want to try it out, and I do plan on doing that free trial this week. So really cool how you have the special setups for certain things that you want to do with your trading. If you want to look at an option setup, you can create an entire view for that. So super cool stuff. So I second the recommendation to check that out. It's a 2-week trial. You're crazy if you don't do it. In terms of wrapping things up, you too are running the show. You are the hosts of this Zoom. So it's going to be up to you guys to shut it down.
Okay.
Recording will be rendered shortly and be made available to all parties involved so that we can distribute and make sure that everyone gets a chance to see what you guys are working on.
Great. Thank you very much for attending, guys. Enjoyed sharing this with you, and hope to see you again in the very near future. With that, wrap up for tonight. Thanks so much.
Thanks, guys.